Good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there in the chat box. Just let me know that you guys can hear me. Hope everybody had a fantastic weekend. Hopefully your trading's been going well. I'm looking forward to our bankers close today. I've done a little research beforehand, so I think we are off to the races and I'm excited. So also just want to give a warm welcome to anybody new with us, and also just want to say hello to anybody watching the recording of this webinar. So awesome, guys. As always, I need to go over our disclaimer. As always, you guys can lose all or more than your initial investment with trading. So please be aware of how big your lot size is and how many pips you're risking on each trade, and how that would affect your account if you were to lose money. I'm not a financial advisor. Please seek a registered financial advisor if you're looking for investment advice. Okay, awesome, guys. So as far as news goes, right, first things first, right, we need to check the lineup of news. I don't really see a lot of stuff other than there was a little GDP with the CAD news, or GDP on the pound. Not a lot there. There's some CAD news later, just a speaker with the Bank of Canada. But really, we have a clean slate today, which is really, really nice. And so we should see just some really slow, even movements in the market. So I've already taken a position long on the Euro franc. This is on a 5-minute chart. And the reason why I like this pair over like the Euro pound or the pound, actually they all look good, but this one I like a little bit more, specifically for the bankers close setup, just due to the fact that we are running into some 5-minute chart, 15-minute chart order blocks. And so we should see some support coming in here. The fact that, there's not a lot of news with the Euro or the franc today. Not a lot. When I say not a lot, like there's no news, which is really nice. We have, so no news. We're end of trading day. London closes in an hour. We're running into some order blocks, supply demand zones. I do think you're going to find some help with this market here. So let me draw out specifically. I like to do it on trading view. So let me jump over to the trading view chart to do. Yeah, so over here on the five, so first things that you need to do, the first thing you have to do when you're identifying structure in this market, and let me remove the Bollinger Bands just because they're a little confusing right now. All I want is pure price action on the chart for you guys to see what's going on here. So when you're analyzing a chart, the first thing you want to analyze is structure, 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 structure every single time. That's how you're going to find order blocks. Okay. So right here on the 5-minute chart, you can see that we have this nice little support level or resistance. I guess it's now support, used to be resistance. You can see the market kind of respected it in here, but it really came to light after the market broke it and then came back up and started really respecting this area as a level of resistance. It respected it here, came down, respected it here, came down, respected it another time, came down, and then started to break, right? And so what we want to find is the mechanism that caused the break of the structure, right? And so technically speaking, it didn't break right here. This is not the thing that broke it. This really isn't the thing that broke it either. It's really whatever the market did right here in this general area. And it happens to be pretty much at the structure point, like whatever they did here. And specifically, I'm really honing in on just this little component right here. This guy, whatever this is what truly broke the structure here. And so we're coming back into that zone. And so I've executed a starter position, several buy orders, looking for this thing to go up from here, just because we are now returning to this area on a 5-minute chart. And it's, again, no news, bankers close hour, end of trading day. When you put all those things combined, the chances of this thing just falling apart and breaking through all of these levels without any real reason or structure to, actually fundamentally, like there's no, whenever somebody says fundamentals, fundamentals really mean like news, economic outlook, macroeconomic variables. Those are fundamentals, right? We don't have any fundamentals at this hour that would cause, in my opinion, that would cause such a massive break of the market. Could it happen? Of course, like that. We have to prepare for anything in this market. It can literally, I've been doing this, I've been trading 10 years, and I've seen crazy stuff happen, but we try to stack the probabilities in our favor as much as we can. But then at the end of the day, we still have to mind the fact that the market has a mind of its own, right? So anyway, so that's why I've executed a buy order there, is because this is the last thing, and you can see it's used it a couple of times, or at least once over. This market broke this resistance level here, and it came back and tapped in. It tapped into supply, or excuse me, demand. It tapped into demand and then went up. And now it's tapping into this demand one last time at the end of the trading day. And so I do think there's a little bit of a trade to be had here. We are creating higher highs, and the lows are higher lows. So that's another thing that you have going for you. At least in the most recent history, that's what we have. I guess if you look at it from a little bit of a bigger perspective, it looks a little more bearish, which is fine. It's a short-term trade, so I'm not too worried about it. But if you go out on a little bit of a higher time frame, so let's skip out to a 15-minute. Look at where the supply demand zones are. So again, this thing hasn't gone really far. Like when this thing comes down, it comes down and then comes right back up. And same thing on the top side. When it goes up, it comes right back. So I kind of like that this pair has been kind of left alone in terms of fundamentals, and the banks trying to take it one place or another. So it's a really nice little, just a nice little banker's close trade. It really is. And yeah, you can look for other zones here. You can cheat a little bit and use the Sonar Lab order blocks. This one's only saying there's order blocks down here. I bet you if you went to the 5-minute chart, you might get some more. Let's see, can we get some more options here? Okay, actually the 5-minute's not showing them. Let's do like let's try a 30-minute. Let's see. Yeah, so on the 30-minute here, you can see this whole thing is an order block according to Sonar Lab. And then down here, this is another one. And then obviously several down here. And so you can cheat up a little bit and use that, or you can just look for them on your own. And when you're looking for them, again, the first thing is what? Find break of structure. Okay. Where break of structure happened is you want to go to the mechanism that caused the break of structure. That's volume. That's volume, or order blocks, or whatever you want to call it. That's where the markets are willing to put their money where their mouth is. So for example, another one would be, let's see. This one's got a lot of real jagged moves here, but it still works. Yeah, so for example, this is a little bit, this one's not as great, but still, this is a resistance zone right here. You can see the market came up, hit that level, pulled back, hit that level, pulled back, hit that level, pulled back, came down pretty far, started to travel back up, and then ultimately kind of broke it right here, right? It's not a huge break, but sure, it broke. So what's the area that kind of caused that break? Well, whatever buys they were executing in this area is kind of what caused this initial move to the upside that ultimately broke this really nice support level or resistance level. And sure enough, when the market came back right into it, and tapped into that zone, the market went up from there. And the same thing's true with this one. Look, I just spotted another one. Look at this. So this was a nice, again, same thing, nice resistance area. You could even argue that this is, yeah, that's the same resistance that I was using before. What caused the market to break out of it another time? It's whatever happened right here in these 2 or 3 bear candles / sideways candles right there. Whatever they did there caused that breakout. And sure enough, the market tapped into it and then went up from there. So that's what we're doing with nearly, gosh dang, all of our trades that we take. And we're doing pretty pretty well. Yeah, here we go. Here's my other account right here. Yeah, we're up 15. Yeah, we're up 15 pips so far. Not nothing huge, but still pretty awesome to see. I just realized I need to grab, I've been busy talking. I need to grab these trades on my other account over here. Let me grab just a few orders. And I need to adjust the, sorry, I'm just adding, I'm managing multiple accounts here. So I got to add some pending orders here too. And I'm going to add those pending orders with you guys in just a moment. Okay, that looks good. Okay, so ultimately, where are we going with this guy? You know, now that we've returned into a kind of a buy block, and I will be honest, I cheated a little bit in terms of the Bollinger Bands. You know, obviously you want to break in the lower Bollinger Band to buy. I cheated a little bit because I felt like there was something a little bit more urgent with the trade, like the fact that we were running into an order block to me and a volume area to me had more sustenance or had more pertinence to the trade than perhaps like um than just hitting the Bollinger Band itself. You know, these types of indicators are just derivatives of what price does. You know, the Bollinger Band doesn't tell you anything about where volume is or where supply demand is, you know, that kind of stuff. Can it be useful? Absolutely. Yeah, we keep using it. I'm not going to take it off my chart for the banker's close. I think it's a very useful tool, but I think overall there's stuff that's more useful in that I'd say us identifying where volume is and that kind of thing, supply demand, you know, definitely carries more weight. So anyway, where are we going with this guy? So where's the target going to go? There's a couple of places we can go with this today. We had a really great banker's close trade on Friday, and it was similar to this one. And so I don't want to cut myself a little too early because um, I'll review the banker's close trade in just a moment from Friday. But it was just absolutely amazing. And I do think I took my profits a little bit too early on that trade. There was a lot more money to be made on Friday. Um, it's a tough thing because you have to find this balance between taking profits, because you do need to take profits when they become available. Like anybody that says you don't need to take profits, they're lying. Like you do need to take profits on your trades. Um, but at the same time, you don't want to cut yourself so short that you don't make enough money, right? And so it's hard to find that balance. That's another reason why a lot of people ask me this question, you know, like, why do you take so many trades even though it's the same order? It's because I like to have the flexibility. If you look at these trades here, they're all the same trade. I like to have the flexibility of pulling some profits on the trade as it becomes profitable, and then leaving some of the other ones to ride a little bit longer, maybe bringing your stop loss to break even or something like that as you become much more profitable with the trade. So what would I do here? So in terms of taking profits today, again, it kind of comes back to where is supply and demand. So since we bought at a demand zone, where's the next supply zone? There's a very slight, I mean, you could argue that this is a little bit of a supply zone right here, and that's around the mid Bollinger Band. So yeah, I do think we'll probably want to take a few profits there. And then the next area, again, you're kind of identifying where structure broke. This was a nice support level. What caused support to break in the past? Like what caused this area to break? Probably kind of like what happened in here. Oops, let's see. I've got all these horizontal lines. I want this right here. Kind of whatever this was is what broke. Ultimately is what caused the market to break such a well-defined support level. And you can actually see the market pretty much tapped into that already. Like it tapped into it and then pulled back today. But that doesn't mean we can't, like, there's definitely still money to be made with that trade. So, um, So yeah, I guess basically up in this area, we do want to pull some profits up in here today. Um, but is it possible it could go even further than that? Absolutely. So, we will want to scatter some of these profits out. Like I'll put a couple right here, bring these in a little bit. All of this is a realist. These are realistic targets for the market to hit before the end of the trading day. And then, yeah, let's leave the last one or two trades. Let's look for an area maybe kind of closer up to some of this older resistance from a couple of days ago. Because, those trades, if those ones win, will make 30 plus pips. And you're not going to get that every day. Like the hopeful trades, you're not going to hit those every day. Um, but multiple times a week, you will hit them. Like if you're patient and you wait long enough, let the trade sit throughout the rest of the remainder of the day, like you are going to hit a couple of those a couple times a week, and they will be worth hitting. But the goal is to hit the rest of these within the webinar or within a few hours of the conclusion of the webinar. We would like to hit all of these right here. I definitely think that's a possibility. Now, the other thing we need to talk about, so far we're profitable and so far the trade's going in our favor, which is awesome. But what do we do if this trade goes against us? Because that is a possibility before it hits our targets. Um, the trade going against you isn't necessarily a bad thing. Um, it's funny. I was talking to a couple of traders, and they said, it's interesting how our minds work during this time of year. When we go to the store or we go on Amazon and we see prices marked down on products, we think, oh, hey, this is super awesome. Price is 50% less or 30% less than it was the week before. I was thinking about buying this anyway. I think I'll do it now, especially because things are on a discount, right? That's kind of how our mind works. Um, but sometimes it's the same thing with real estate, or actually, I was going to say the opposites with real estate. I'm going to say how it is with trading here in a second. But sometimes when we see the market going against us in trading, we think, "Oh my gosh, this is crazy!" Like, or we see our 401ks go down, and we're like, "Oh my gosh, this is insane!" Like, I, my investment's down 30%. This is not good. When in reality, sometimes we need to be thinking, hey, I've got a discount here. Do I believe in this stock, or do I believe in this currency, or do I believe in this real estate transaction? Right. Those are the questions we should be asking. In some places, we've had quite the dip in real estate. We've seen places drop 15, 20, 30% in some areas. Sometimes I wonder if you should be asking the question, should we be buying more right now? And I don't know. I'm not here to answer that question. It's just something, I think it's interesting how people freak out over investments when they go down instead of thinking, maybe I should be buying more, especially if you can stomach, waiting a little longer, because it's possible, like you could buy a house, it's down 30% from its high, and then when you buy it, it goes down another 10% before it goes back up again. Like that happens all the time. But if your time horizon is like this really long-term thing, maybe that's worth it, right? In our situation, our time horizon on this trade is only a day, right? So we can't afford to really go down too far on this trade, but that's why we stack probabilities in our favor. We look at, is there news that would cause this trade to go against us without the ability to fix it? Well, there isn't, so we've got that, so that's good. We look at things like, okay, we're trading at the very end, the tail end of the New York or the London session, right? London market closes in 40 minutes. So the chances of these banks looking to bring the market back to a mean by the end of the day is very likely, right? Um, what else are you doing? You're stacking that, and then you're looking for volume zone. That's another thing that we've stacked into our favor. And there's really not much more that you can do to stack the probabilities in your favor after you've done all that due diligence, right? Let's see what else you can say about this. I think this is good. Okay, so where would we buy if this thing kept going down? So um, I do see obviously if it came back to where our entries are, it's still a great place to buy. I mean, obviously you wouldn't want to close those trades out because it's likely that they'll just go back in your favor quickly. This is actually a really neat area right here that I've been eyeing. It's a really neat area. If the market pulled back into this, that would actually be a phenomenal area to buy on the 5-minute chart. There's whatever this mechanism is kind of what caused not necessarily a breakout of this level, but it did break out of whatever resistance was right here that the market had. And so it's not the strongest level you've ever seen, but could it be useful? Absolutely. Okay, it looks like we're moving a little bit more in our favor. Let's see. Is this we're almost, let's see, we're hitting the mid Bollinger Band now. We've got trades that are now up 6 pips on the low end, 8 pips, 9 pips on the high end. I am going to close 1 or 2 trades out just because we do need to take some profits today on that. I'm also going to do that on my other account here. Give me 1 second. 1, 2. Okay, it's important to take profits, guys. But I mean, again, it's hard to achieve that balance. The reason why I'm taking these profits here is just because I wanted to make sure I close out at least some at the mid Bollinger Band here. But the rest of these, I think I can let ride a little longer. But this is awesome to see. It's fun. Like, we just took this trade 20 minutes ago and we're already profitable. I mean, I just closed out on my other account. Those trades were up $50 or $60 each, and I just closed 2 of them out. And I still have another 4 or 5 that are up $50 each, that's awesome, right? We're not looking for this big extravagant move to make money on. You don't need a big extravagant move to make your money. I would say, especially most of the traders that I talk to, they make their money in the shadows, like what we're doing. Like they're making their money on stuff they really feel confident about. See, the thing is, if you feel really confident about a 10 pip move, let's do it this way. I can make more money on a 10 pip move that I am dang confident about, that I've done over and over and over again every single day, than I could on a 100 pip move that I feel only somewhat confident about. Because let me put it this way, on a 100 pip move and we take trades like that too, right? But if we're not as confident, I'm going to be taking a smaller contract on that trade. I'm going to take a smaller position size because, I'm not quite sure about this trade. If it goes against me, I could lose a lot of pips. So I want to make sure that that dollar amount stays down too. So, you know what I mean? Whereas like if you're looking for 10 pips a day, 20 pips a day, 15 pips a day on the banker's close, and you know exactly what you're doing, you've done this so many times, you're following your rules, and you can go feel confident putting a bigger contract out there. Yeah, you can definitely make your living and make a lot more money on something that you feel very confident about, right? So that's the point. I also had some people ask me this question privately. They said, how did I make all these pips this morning? Because obviously most of my pips were made last night. Obviously great that we're making money right now, but where did all this come from? So let me show you. It's the exact same type of setup, right? Like last night I was just probing the market, watching some movies and just one side of the screen looking at the market, one side watching movies. It's just fun, like that's just my hobby, right? And so I'm looking at the pound CAD. I come across the pound CAD, and here's what I find last night. Literally, I found this just as it was happening. This little wick right here just pulled up, and I think that was the GDP news that honestly caused that. And I thought, wait a second, did that just tap into a Yep. I was like, oh, that tapped into a demand zone. Okay, let's take a closer look at this. So I took a closer look, and I actually just drew a horizontal line at where that this is weird because on this platform is wonky because it says it's right there, but if you go to Trading View on the pound CAD, it's actually it's so funny. I don't trust the other platform. Look at this. This one on TradingView is saying that wick came down to right there, which is still above the supply zone, versus this platform is saying that this wick came below the supply zone. So, and I know that's not true. That's definitely not true. So anyway, just something I noticed. No offense to this platform. It's just sometimes different brokers and different information give you different information, right? So anyway, I was over here and I saw this and I was getting really excited because look at the structure, right? This is support resistance, right? Like this, let me move this one out of the way. This is resistance, right? Market comes down, retests, comes down, retests, comes down, retests, comes down multiple times. What caused the market to break out of that? What was the most recent consolidation? This guy, that guy right there, right? A lot of people say, isn't support and resistance the same thing as supply demand? They are different. They're very similar, but they are different. I do want to make that so abundantly clear to you guys when you're trading with me, that when the market comes into, like when it retests a support level, that's awesome, but that doesn't necessarily mean it's supply or it's demand. Okay. Um, when the market comes back to a region that caused a breakout that subsequently broke a structure level, that's supply demand. Okay. So in some cases, like you can have supply demand very far away from where support and resistance is. Often they're pretty close together, but they are different, right? So, so anyway, this is a demand area because this is the last thing that caused, this is the last thing before the massive breakout. I like to call these gas stations on a, or pit stops on a road trip, right? The market moves to one gas station to the next gas station, and then you don't want to buy and sell on the freeway, right? Like when you're on the straightaway, you know, you don't want to buy and sell on the straightaways. Typically, you want to buy and sell when the market reaches the next stopping point. What's that stopping point? Typically where supplier demand is, right? So right here, this was an example of that. So this market came right into um, this area, and I was fortunate just to be looking at my computer at the time when this happened, and I just executed a truckload of buys right here, and boom, this thing just went to the moon. I did not capture most of this move, by the way. In fact, if you come over here, you'll see how much move I captured. It was very small. Like I'll plot my trades so you can see what I did capture. Um, oops, that's not going to do it. I need to show you more trades. I did not capture most of that move, just to be fair. But that's what's cool is you don't need the whole move. You don't need most of the move to make your money. Here they, that's it. That's all I did. I just went hard. I just went hard on this trade here because I got there pretty early. Obviously, you know, so I got in basically right there. I didn't capture most of that wick, and that's okay. But to me, that was the signal. The fact that it wicked into it and immediately came back up to me was a signal that, hey, this market uh, is being rejected. It does not want to go down. It's rejecting every single chance it gets to go to the downside here, especially when it taps into a demand area. The market is just sending it really high, a lot higher. So I felt an extreme amount of confidence with this. And again, do you need to capture the 100 pip move? No, you can make a living on 10 pips, guys. Like you really can't, or whatever. I guess I made 20 or 30 pips on each trade or whatever that was. So yeah, I put in a bunch of buys there, made over 300 pips on that move last night. And then I went to bed, which was really awesome. And so yeah, basically all of the trading that we do has some level to do with what we just of that analysis that we just did there. So even this banker's close trade, and for years, I actually traded the banker's close for years without even using supply demand zones. And I guess I just never realized that I was trading in supply and demand. Um, but that's, yeah, it's kind of cool that we've been using it anyway. But yeah, just in recap, why did I choose this pair for the banker's close trade instead of, say, the euro pound or the pound franc? It's because I felt like this one had the best resistance or support or resistance associated with supply and demand that made me feel like I could buy into this and get a really good trade out of it. So the market's come up just a little bit. I'm not going to close any trades just yet. I'm always tempted, right? But it always stinks when you close trades too early. And we've already taken a couple of profits on this. So I'm going to let one more impulse to the upside come in. It looks like we're close. If we get another impulse to the upside here, we'll take another trade or two off and then we'll go from there. But we're getting close. We'll see what happens here soon. Real quickly. Oh, by the way, guys, I did pull off my swing trade on the euro dollar. I closed for a $2,000. In fact, I closed for $1,968 of profit on the euro dollar last night. That was my swing trade. It was this trade that we took. Here, let's go to TradingView. I super like that platform better. So we bought right here on that wick on Thursday night, right there. This was a supply demand zone. We bought there. It came up and we were up, $2-3 grand on Friday morning, and then it pulled back late Friday into Sunday, and then Sunday night it came back and retested this demand zone and then went back up. Unfortunately, I did not capture most of that. I closed out. I don't know where I closed out, but somewhere on this move to the downside. Here's where I got nervous with this. So I said I got to take my profits because so basically up here is huge supply. There's a ton of supply up here. Okay. And you have to go back several months to find that. Okay. But this is resistance right now. And each time the market had come up to here, once it found its another supply zone here, a shorter term supply, it came down right there. It came down right here in this example. And then in this one, here's another supply zone right here. It came right to it and then came down. And I saw that and I said, okay, that's not a good sign. I need to get out of this trade. So I was up, I think at one point, almost 5K on this trade. But it was mostly while I was asleep. And unfortunately, I didn't take it. So I closed for just under $2,000. But anyway, right, it's frustrating sometimes when that happens. Like, obviously I would have loved to have captured most of that move, but it is what it is. So I'm looking for the next trade on the euro dollar now. I still have a buy limit down here at this level. It's just sitting there, right? That's a great area to buy. That is a awesome area of demand right here. And then I also have a sell right here at this supply area. This is an awesome one too. It's just very far away. And then I also have another one up here. This is a great area to sell at, but the market just hasn't gotten there yet. Okay, our Euro franc trade is doing awesome. It looks like we closed out of another trade automatically. We hit a target. So I don't feel like I need to close another trade just because we hit our target. Although on my other FTMO account, I'm going to close another trade out or two, take my profit. Okay, so now I'm left with, on my other account, I'm left with two trades floating. I'm up $80 each one of those. And then here I'm left with three trades floating. Is that right? No, I'm left with four trades floating. So I'm going to close one more out then. Boom. Nice on that impulse there. And then I'm going to just move one of these targets up a little higher, because it is possible we could get a real runner today, especially because we bought at a order block during the banker's close hour. We could get a real runner. So let that guy go. I'm going to let these last two close right here. Specifically, if we really want to hone in on a target, you'll want to close the next supply area. If it breaks above this, like short term, would be basically this banker's candle right there. It's also known as an FU candle. I won't explain why, but you can probably figure that out. That wick right there is why it's called the banker's candle or an FU candle. So it's the last candle move up before this move down. and you want to have your target just below that. So this is a great area to target right there. And then you have this more hopeful trade up here in this last supply area. So yeah, I think we honestly like slayed this market today. This is awesome. So great. So we'll let that go. Oh, the other thing I wanted to show you guys while I'm thinking about it, let's talk about our trade from Friday, the euro pound. This was our banker's close from Friday. So on Friday, we bought down here. Like this was the trade. And we closed way early. And it's okay. Like it's fine. We still made money. I guess we can't complain because we made money, right? But it would have been nice to make even more, right? And that's why I'm trying to do a better job at holding some trades longer term. So they'll pop up here in just a second. Yeah, there they are. So we bought basically this whole thing down here. We bought that entire low, and then the market came up to here and we made our money. And yeah, I do feel bad that I could have left at least one or two trades, maybe three, that could have held out till the end of the trading day. So this was the weekend. These weird candlesticks right here that don't even look like candlesticks, it's because it's the weekend. The market just spreads out and does weird things on the weekend. So, oh guys, this trade is awesome. It just keeps busting. Okay, I got two trades that are up $111. Now I'm going to close one last. This is on my other account. I'm closing one more, and I'm just leaving one trade to ride now on my other account. So awesome. Just so awesome. Give me 1 second. I'm just managing my other account here. So legit. Okay. Sorry, back to this trade, euro pound from Friday. And these are all the other bankers close trades that we've taken. It's kind of fun. See, and that's what's crazy is like we just kind of scalp this market during that hour, and each time we make our money and we get out, we make our money, we get out type of thing. This one really could have been a real runner here. Why was this such a good area to buy? Like, and also, how did we know to buy there other than the fact that there was no news on Friday? There, we were at a lower Bollinger Band. Like, how do we know to buy there? Like, there's other reasons. Like it has to go to, again, where is supply and demand. If you go to a 15-minute chart, you can see those levels, right? So when you're coming back here, look for different things. Like you're looking for, okay, when this market, excuse me, was back here, what caused, or excuse me, first thing, where structure, right? Where structure? Well, there's one right here. This is definitely a resistance level, right? You can see that the market tapped in there. It tapped right there. Like that's definitely a resistance, support resistance level. Okay. Where are some other levels? I would say that right here is a nice support resistance area. You can see, I'll show you, like that was resistance right there. This was resistance right here. I wonder if I went on a higher time frame. Let me try a 30-minute. Let me see if that continues to the left side of the chart. Okay, I might need to go on an hourly. Let me see if I can find that. Guys, our Euro franc trade just keeps slaying it right now. It's still going up. It's just so awesome. Oh yeah. So back here, so I pointed out on a 5-minute chart that was support, and then yeah, you can see like on the higher time frame here, you have this, and then you have this, and you have that. Confirmation, guys. That's 100%. These are both support resistance areas, 100%. Okay, those are the two most obvious ones. So now you went to the higher time frame, top-down analysis, you come down to here, and now you can make a better decision as to what you're going to buy and sell. So now you come down to here and you're like, okay, great. Oh, and then I got to go back to that 15-minute chart because I need to find where the supply blocks are. So this is what we're honing in on now. This is back on December 1st and December 1st. And so we know that these are structure levels. Guys, another take profit just hit. What a good day. Like I just saw it just fly off the screen. We just hit, another one just hit. All right, guys, I'm taking my last trade on this other account. So that's $130 on my last trade there. And then we're going to leave this last one to ride. That is so fun. I love that. We don't always hit our take profits in the hour. So it's really fun when we do hit our take profits. That is so fun. Anyway, so that one just hit right there. And now I'm just going to leave this last one to ride up into here, and happy day, right? I think at this point, we can feel comfortable bringing this stop loss to break even right up here. Okay, sweet. And then let me go over to the euro pound. That's what we were looking at right here. So, okay, so sorry, I get so excited. Right over here, this is what we're looking at, because we're trying to determine with this right here, where is the order block? Where is supply and demand for our bankers close trade for Friday, right? We want to find out if this is really going to be a great trade that we could take, something that we could hold and feel confident holding like we did today, right? So right here, we've determined that this is structure, this line, and so is this one. These are the two most obvious lines. And so that's the very first thing you have to do is, where is support and resistance, aka structure, and then find out what caused it, what caused the break of structure. So when I came in here, I said, okay, well, the most obvious thing here is basically this area right here. Whatever happened right here is what caused this breakout. And it's not necessarily this low. It's, if you want to break it down to the most minute detail, it's whatever they did right here in these last 2 or 3 candlesticks. It's really just this right here. Whatever they did there is what caused this. So if the market ever returns to that level, what do you think is going to happen? Boom, look at that. Taps in on a single candlestick, and then goodbye, see ya, goodbye forever, right? Or I guess for a little while it's gone, right? Taps into that. And it didn't tap into support or resistance. It just tapped into whatever this is right here, and then it was gone, right? So anyway, so that area is a good area for the future too. It's not just, obviously you want to be the first guy to capture this, but yeah, if it keeps going, you want to try to be the first one to capture this if you can. And then if it keeps going, you can try to snag it again, if that makes sense. So anyway, I saw that, and then there was another level down here that I was excited about. Like, you could argue that this is just a banker's candle, like this last blue candle right here would also be technically a supply zone. And then even this guy right here, I don't like those ones as much, but sure, you can count them. And so what you can do is you can drag these out. So you can drag this one out right there. Obviously it broke a little below that one, but it came into this other one right here. And then you had this one that overlapped it. So you have 3 pretty solid supply demand boxes down here on Friday for the euro pound. So the case for the euro pound was extremely strong, and I felt like we could buy into this and do very well for ourselves. So anyway, that was the trade from Friday, and and the one thing I wish I had done better is I wish I had held on a little bit longer to this trade. So anyway, super awesome, super fun. And then the same analysis kind of went in for today's trade, which has been so wonderful. Is basically on the 5-minute chart, I was looking for where structure here. Okay, well, this is resistance right here. What caused the market to break resistance? What caused the market to break this? It's whatever they did, whatever the market did right here is what caused that level to break. So if the market taps into that again, there's a good chance for a good trade. And sure enough, And then I think especially this trade, and again, this goes back to the fact that you're at the end of the trading day, so the likelihood of something crazy happening and market structure to not work out is even less likely. So and and conversely, it's even more likely to work out because you don't have any fundamentals that could drive the market to go another way. And then you have, so you have no news because of that, no fundamentals that could change it. And then you have end of trading day. So the market, the banks in London have an agenda. They need to be able to return the market to a mean by the end of the day. And so if the market's at a low here or at a volume zone, it can't stay there. Like the banks have to do something with that volume. Um, and sure enough, that's exactly what happened here in the last 45 minutes. And it's the same thing that happened on Friday. And that's why I chose this trade over the euro pound today and the pound franc. I'm actually curious to go see how those ones would have turned out. I think they still would have been good trades if we go take a look at them, but I did like this one the most out of the options that we had. And then also, if this thing had broken below this, my my backup order block was this. Like I felt like if the market were to have come down, I felt like if we tapped into this area, we would have gotten a lot of help. So I felt pretty good about this trade. I really did. And obviously worked out. And then let's go to the euro pound. I'm just curious to see what we would have done today. With this one, I think we would have bought this one too, but I just didn't have the same order blocks or the same structure to work with, right? Like, I just didn't. Like this is kind of resistance right here, but we haven't broken it. That's the hard part. We haven't broken it. We've actually broken support right here. There's really nothing, I don't really have anything to work with, except that this is kind of from Friday, this is kind of a resistance area. What caused that to break? Oh, whatever they did right here is what caused that to break. So maybe if the market tapped into that area, we could be good, but the market would have to come down another 11 pips or so, and then we'd get our good move today. So this is a trade. It still could work out really well, but it's the type of trade where we'd have to buy in and then just wait for it to do its thing. And then we would be done with that trade. So this one I wasn't as excited about. I'm sure we could have done it though. We certainly wouldn't have been out of the trade by now though. We'd still be working it. The pound franc, this trade I was thinking about shorting. It looks like it would have been good for this first little bit, and now we'd be in a little bit of trouble. But I was looking for supply and demand areas. This one actually has a good area back here. There's a banker's candle over here that would be worth maybe shorting. And we're coming right into it right now. So that actually might be worth it. Who knows? I might take another trade today. I'm just very happy with what we did today, but we need to go out to a higher time frame to make sure we still have more help besides just the banker's candle over here. Let's go to a 15-minute chart. Let's see if there's anything else. Again, you're looking for break of structure points. Well, yeah, I would say that this was kind of a support level right here. You can see it, a little bit of support there, resistance here, support here, resistance. Yeah, so what caused the market to break that? I would say you just include this whole thing now becomes a supply box right here. Because this banker's candle, you're including that. And then in reality, though, I would say this is the best area. It's already been tapped into once, and I don't like them as much when they've already been tapped into, but that would be kind of my area. So yeah, if the market broke, let's see, it would need to go another, 11, 10 pips, and then you'd be in a really good supply zone, I would believe, for this one. So yeah, we could have traded this one too, but with this one, we wouldn't be done within the webinar. We'd have to swing this one throughout the remainder of the day. And it's not a bad thing. We do that quite often, but it's always so much more fun to make the money in the webinar like we did today. But that's all I really have with this one is, okay, what was the last thing that caused this, what caused that break of structure? Oh, it's really whatever they did in this banker's candle up here, what this kind of area right here is what ultimately broke this level, whatever they did there. So, and like I said, it's already been tapped into. They tapped into it right there, and then the market went down 100 pips once it tapped into it. So it's already been tapped into, but that doesn't mean it can't work again, especially now that time has elapsed quite a bit. But really, I would say if you're a seller on the pound franc, you still have another 15, 20 pips of pain before you're going to get your move down. So it's just something to think about. All right. But I think we're done. Like, I'm excited. Like, obviously a great day. I'll post this trade later. I'm gonna give this trade probably another 2, maybe 3 hours. If it goes up even more and hits its target, great. If it doesn't, I'll close it out manually and I'll text you guys in Telegram when I do that. But yeah, it's a free trade at this point. Stop losses at break even. We've already made our money on all of our other trades today. So super exciting, super awesome, happy day, right? The other thing I might do, just so you guys are aware, I might take, because I'm going to wrap up here in just a second. I might take a dollar yen position later for the Tokyo session. I told you guys on Friday that I'm going to trade the euro dollar and the dollar yen a lot more, especially for our swing trades. So I'll be looking for, well, actually, I see an opportunity already on this one. So hopefully you guys can see it too. But like, this is a resistance area, right? Nice resistance. Okay. Why is it resistance? Right here and right here. Kind of broke right here, to be honest, but right here as well. This is an example where supply demand is at support and resistance. So like, whatever happened here is what caused this breakout. And that happened within the last couple of hours. So yes, if the market tapped back into this area, this would be a great buy with a great reward to risk ratio. Um, yeah, that would be a good area. Another good area to buy at potentially is maybe this right here. I don't like that one as much. But it is an area. I would say this one for sure though. So I might even place a trade in just a little bit on that. That looks like a great little area. Yeah, that's awesome. We're starting to get higher highs and higher lows too. So a continuation of this direction would be great. Yeah, that's awesome to see that. It's fun. You can go back. I love going back to see other areas. I'm seeing other opportunities from the past. Like this was a back here. This was a support level right there. What caused this market to break support? It's whatever they did right here. And so naturally, if you draw that box out, market tapped into it right there and came down. It's actually tapping into it again. So maybe we'll see it come down. But for me, if it does come down, this is the next area I'd feel pretty confident buying in, is in this box, because again, this was a very nice resistance area. Nice resistance, very respected, very admired resistance level. And then boom, disrespect. Who caused the disrespect? Whatever they did right here. It's the last thing to happen. Last consolidation. And it is around supply. It is around support. And again, I don't want you guys to think that support and resistance is supply demand, but they are often similar and often found around the same area. So, all right, guys. Well, I'll probably post that trade later. I'll update you on the Euro Franc. Really fun day. Great way to start the week. Really excited about that. And we'll get some more trades out this afternoon for some more swing trade opportunities and overnight trade opportunities. So All right, guys, thanks for coming. Enjoy the rest of your day, and we'll see you tomorrow.